Short exercise 8-9. We're going to journalize from the finished bank reconciliation. So remember, the simple explanation of the bank reconciliation is you're going to compare your monthly bank statement to the company's cash account and see what transactions you are missing and to see if there's any errors. And then, this is the part we're doing in this problem, if you're missing any transactions, enter them into your journal. If you made any errors, correct them in the journal. In this case, we only have missing transactions, no errors. So safety, security, systems, bank reconciliation follows. So here's the bank reconciliation that we did in the previous exercise. It says included in the bank balance is a collection of $620 on account from Brendan Ballou. So this bank collection here is what they're talking about. So they're giving us extra information. So this came from our customer, Brendan Ballou. So that, in other words, that person owed us money. So when we do the transaction, we're going to have to lower accounts receivable for Brendan Ballou. Journalize the company's transactions that arise from the bank reconciliation. Include an explanation of each entry. All right. And then we're going to journalize the transactions in the order presented. In other words, from top to bottom. So first of all, let's get back to the bank reconciliation. The bank reconciliation has two parts. The bank side. So remember, these transactions right here and right here, these are transactions that the bank did not know about. And then these transactions here, the bank reconciliation, interest, revenue, and service charge, are transactions we did not know about. So in our accounting records, right here, this is the journal, our accounting records, do we enter the transactions that the bank did not know about or transactions that we did not know about? Well, you cannot go into the bank, break into the bank, open up their accounting records and enter transactions. So we, obviously, can only enter the transactions that we did not know about. So we're going to enter the transactions from the book side. And notice the first part we're doing is addition. So these two transactions here made our cash account go up. So cash is increasing. And of course, if you forgot, cash is an asset and it increases on the debit side by $620. Now, why did we get this $620? Because Brendan Ballou owed it to us. Brendan Ballou is one of our customers. So if a customer owes us something and they pay us off, we have to lower accounts receivable because we can no longer receive that money from Brendan Ballou. So let's see here, collection on account. And the reason we are crediting AR is because AR is an asset and the asset's going down because Brendan Ballou owes us less money. Okay, going in order, we've done the bank collection. Now let's do this interest revenue. Notice the money, it says we're adding it. So that means cash is going up. So cash increases with a debit, $10. And why did we receive this $10 cash? It's from interest revenue. And interest revenue, is it going up or is it going down? Well, it's increasing. That's why we're going to credit interest revenue. Interest earned on bank balance. And then finally, we've got this service charge. Notice it's a less. That means cash is going down. Since cash is going down by $20, does cash go down with a debit or a credit? Cash goes down with a credit. And then, so the debit is going to be something to do with a bank charging us $20. So it's probably going to be, well, not probably, it's going to be some type of bank, like a bank service charge or miscellaneous. Some companies call it miscellaneous. Some companies call it bank service charge, but it has to be an expense and it's going to go up. So let's see what they have in their chart of accounts. They call it bank expense. So the expense is increasing, which is why we're debiting it. And this is, let's see here, bank service charge. So now that we have entered these missing transactions into our journal, if we went and looked at the ledger balance for cash, it would now say 3,060, which is the correct amount. And that's it.